Last is the fourth situation. I will only explain it from here because this is the summary chart of my EPS. EPS is a very broad concept. It's a very complicated concept and it's a big concept. But in one slide, I have tried to present it and give you a bird's eye view. When you want to revise, you can just look a quick through at it and it's done basically. Okay. So EPS, there are two types of EPS. As you can see, one second. Let me take my pointer. Just one second. Pointer. Yeah. Okay. So EPS, basically there are two types of EPS. One is basic EPS, other is diluted EPS. Okay. In basic EPS is simple, PAT minus preference dividend divided by 1/OS. 1/OS means weighted average number of shares outstanding. Weighted average number of shares outstanding. Okay. PAT is profit after tax, which is net income. So automatically you get profit up. EPS is earnings per share. Okay. So you get that. Now basic EPS is easy to calculate. Diluted EPS is a complicated chapter. Okay. Diluted EPS concept is that if suppose in future convertible securities gets converted like debt preference or stock warrants and they become shares, then automatically the number of shares in denominator will increase and the profitability may dip. So in that case, companies or accounting standard wants to report the worst case EPS. You can say in worst situation, if all these convertible securities would have converted today, what would have been the EPS? That is something which they want us to calculate. Okay. Now you have to check at individual security level, not at the overall level. Individual security level, whether it is dilutive or anti-dilutive. How you will check that? You will have to calculate these ratios with this formula. If these ratios are lower than basic EPS, then automatically if you add those things, it will be dilutive because it will result in decline in the overall EPS. If it is anti-dilutive, then we are not concerned with that. See, the concern area is very clear. The concern area is that if we convert those securities, then whether it will happen that my basic EPS will be lower or not. If it is not lower, then I am not concerned with that. So you have to calculate or check for only securities which are dilutive. These are the formulas. I'm not going to explain the formula. You're supposed to know. Okay. Then this is basically stock warrants. Is exercise price less than average market price? Yes. Then just one second. If it is yes, then security is anti-dilutive. If no, then security is anti-dilutive. Okay. So this is the formula you have to use and you have to check at every level, at individual security level. So for debt separately, for preference separately, for warrant separately. If there are two debts, then for first debt separately, for second debt separately. That will be the logic. And individual level you will check and you will only take those securities which are dilutive, while you will eliminate those securities or leave those securities which are anti-dilutive. Once you do that, in this overall scheme, in this formula, in numerator, you will add what was there in the numerator of the dilutive security. In denominator, you will add what was there in the denominator of the dilutive security. That's it. That is what you have to do, and automatically you will get the diluted EPS. Okay. This is an important part. I have explained. I'm not going to explain the example. It's not like you are supposed to check that, but this is something which is the crux of the matter or meat of the matter, which I have explained. Okay. Treasury stock method is something which I have explained, which is checking the average share price, the new average exercise price is less than the average share price or not. If that be the case, then it's fine. Okay. So these are the formulas. That's fine.